Hello everyone, my greetings to one and all. This is the 8th session in understanding basic concepts for estimation of national income. In the previous session, you have understood the concept of consumption of fixed capital. I am Poonam Vohra from Macroeconomics Learning Center. In this session, you will understand the concept of net indirect taxes. So let us begin. Net indirect tax. Let's recall, what do we mean by tax? Tax is a compulsory contribution to state revenue levied by the government on the income of individuals and institutions. So a tax is categorized as direct tax and indirect tax. A direct tax is levied on the income of individuals and institutions by the government, and the burden of this tax cannot be shifted on to someone else. That is why it is called as direct tax. Where indirect tax is imposed on the production and sale of goods and services by the government. In this case, burden of tax is shifted onto the consumers in the form of sales tax. Nowadays it's GST, goods and services tax. Previously it used to be sales tax, excise duty, custom duty and so on. So net indirect tax can be found by deducting subsidies from indirect tax. Now what do we mean by subsidies? Where subsidies are financial assistance given by the government to an enterprise either to encourage the production of certain commodity or promote exports or encourage firms to set up their industry in the backward areas. Subsidies are deducted because here financial assistance is received. In the case of taxes, taxes are paid. So net indirect tax means how much net one has to pay. So one needs to find net indirect taxes by deducting subsidies from indirect taxes. Net indirect taxes also explain the relationship between market price and factor cost. Now what does it mean? Market price refers to the price at which product is actually sold in the market. So it includes indirect taxes but excludes subsidies. Whereas factor cost is the amount paid to the factors of production for their contribution in production process. So it excludes net indirect taxes. Or one can write the relationship between market price and factor cost in this manner, where market price minus net indirect taxes is factor cost, and obviously factor cost plus net indirect taxes would be market price. I hope you have understood this basic concept of net indirect taxes. With this, the session comes to an end. The next session would focus on the concept of stocks and flows. Till then, keep reading and keep learning.